morning, everyone, and welcome to our opening keynote session for the Investable Showcase Virtual 2020. I'm delighted to be welcoming you to the opening session, which is a report written and hosted by McKinsey titled Biotech in 2020 and Beyond. A lot of the themes and discussions that we're having throughout the rest of the conference are going to be permeating through this presentation, I believe. And so delighted to be handing over to the presenter for today, Jorge, who is going to be taking us through the presentation. If you have any questions that you'd like to ask, please do put them in the chat function to the right-hand side of the video. There's also a poll there where you can submit your thoughts on the capital markets and where they're going post-COVID. But for now, I'll hand you over to Jorge to take us through the presentation. So Jorge, the stage is yours.
Thank you, Josh. Good morning, everybody. Pleasure to be here, and I thank you for joining this session. Also, would obviously like to thank LSX for hosting us and for partnering with us on the Investable Showcase. Obviously, a very different version from previous sessions, but we hope we make this session interesting and especially useful for the rest of the conference. One other word of thank you for many of you that are listening to the session that helped us think through the themes here as we prepared a view on how biotech fared throughout this unique year in our lives, and what are some of the trends and some of the things we see playing out for 2021. So in today's session, I would like to take us through a few of the messages that we surfaced as we thought through the year of 2020. Obviously, on one hand, we'd love to take you through some of the latest views on how the largest disruption most of us have ever seen has impacted the global economy and its various industries, and how biotech has been somewhat of a shining light over this period. We would also then like to have a discussion on how some of the momentum that was gathered even before COVID, but certainly accelerated this year, as impacted the industry itself across its various sides. And then we would like to end on a high note, where we discuss a little bit of the things that we're seeing happening in 2021 and how biotech, playing through the pandemic role, but even beyond, will probably be an interesting area for the year to come. And we will discuss some of the top questions that are popping up as we gear for the new year. So let's start with that macro view and what has been essentially the largest disruption, I think, in our time. And through this very unique year, we've been essentially grasping with two major imperatives, right? One, safeguarding our lives, suppressing the virus, obviously figuring out testing and how to scale it, engaging immediately into treatments, and hopefully moving fast to cures. Obviously, we're all very inspired by the vaccine news this week, but essentially trying to, as many of you heard, trying to flatten that curve. But at the same time, another imperative, which is safeguarding our own livelihoods, right? Where we've trying to do everything but flattening a curve, in which we've tried to support people in businesses getting back to work, and trying to scale a recovery, which at least in the first part of the year put us in a very, very negative trajectory. Some of you might know that since the very beginning of the pandemic, or even before it was called a pandemic, we ourselves have been looking at how the economy is faring and how global executives feel about the trajectory of the global economy. Many of you might be familiar with our 9 scenarios, which is the way that we like to look at the global effects, where we're simply looking at how people feel the virus spread will work, and will we have rapid or effective control, or broadly fail. And in another dimension, we're looking at the effects in the economy and what is the response. Are those interventions ineffective, or effective. And that essentially, provides a view on what people expect in terms of the trajectory and the various curves that many of you have heard. So the last time we pulsed the global executives was in October, right? So just in the month that just finished, right? And versus the beginning of the summer, we already see some changes. As you can see on the top row, people feel that we probably are becoming a bit faster and more effective in the control of the virus. Whereas, if anything, there's a slight increase on the vertical column on the left, where perhaps the interventions are seen as less positive, right? So basically, and this is, about 2,000, 3,000 executive CEOs, et cetera, that we poll throughout the year. Most people actually believe that we're in that scenario in the middle where everything is a little bit partial and the recovery is actually going to be quite slow. What that means in terms of of impacts, and here just bringing in the perspective from the zone where we're sitting right now. What you see here is the expected outcomes for the global for the broader economy. In orange, you see the actuals, if you will. We see after the big drop to Q2, we see a great recovery in Q3, but obviously the path is quite uncertain from here on out, right? We all hear that at least on the Eurozone, we're locking out. We just had news from New York today, waking up in terms of some of the actions that are being taken there. So quite a lot of uncertainty in terms of where the trajectory will be. But as we mentioned, most people feel that we're going to have maybe not a W curve, but still somewhat of a prolonged recovery that maybe gets us back to a pre-pandemic level, maybe only at the end of 2022, right? And as you can see, in any scenario, in any case, the actual delta, the actual recovery quarter on quarter is modest. So the world will probably, and the economy will keep aching for a while. In this context, biotech has actually been performing quite well. The economy, biotech, if we look, for example, at share price evolution overall, right? We see, obviously, if you look at an index like S&P, we obviously see the big drop and then a recovery over time through the various months post crisis, right? And we have overall a net increase. But if we actually look at the curves for biotech indices, obviously in China we see a very fast recovery and an overall growth, even if it dropped a little bit. The same is true for Europe. Also a drop, but then a broader increase, and obviously the same is also true for the US, and this is looking across about 1,000 companies. So obviously reacting to the crisis, but coming out stronger, if anything, at least from a share price evolution perspective. If we look more broadly and you compare it with other industries, right? So this is the plot that we update every month, right? Where we actually look at shareholder returns. And by the way, these are weighted to local currencies, and these are year to date. The thickness of the bar indicates, the market cap associated with that industry. And you see that there's a lot of, even by now, there's a lot of industries that are going down, a lot of industries that are going up. And what we can see is, the ones marked in blue are somewhat associated with healthcare, and you can see biotech is definitely among the industries that are growing faster, and certainly one of the ones that are coming out stronger out of in the healthcare space out of the crisis, or at least out of the first year or the first 3 quarters of the crisis. This also bodes well for the future, at least how we see it. Essentially, we're basically plotting economic profit and economic profit growth by company. So obviously, quite a lot of companies here. And basically what we see is when we look at 2019, the blue bars, and when we look at the long-term implied growth of this economic profit, right, we see that the companies that were already faring well in 2019 actually through the crisis and moving forward are probably the ones that are going to get better, whereas the ones that had been struggling will probably continue struggling. So this is obviously a very important indication when you look at overall economic profit across industries, and indicates that biotech as a broader industry is likely to get better. This has been obviously a crisis in because a lot of companies in biotech have dedicated themselves to COVID, right? But because also this is an area that people at any way progressively start to understand. Obviously, probably 2020 helped and created a little bit of tailwind for the industry. But obviously there are other factors that are contributing and continue to contribute to the growth of the industry, right? It's not just the crisis, but it's also the fact that the underlying factors of innovation are continue growing. We call it the bio revolution, and I invite you to take a look at this broader view on the various sides of biotech. But obviously, this is something that is driving the overall industry, COVID or no COVID. So let's move then to take a deeper look at what happened within biotech over 2020. The message here, as I said before, is that it got stronger. It got stronger also in terms of investment and in beating the odds that we might have had looking into the world in February or in early March. The investments are in our perspective at an all-time high, and that's true for public and private. So it feels ever more like a good place to be, maybe the right place to be. And that we have this biotech wave that just got maybe accelerated through 2020, even if there was some concerns early on. Let us maybe dwell on these points a little bit more in detail. So if we look pre-crisis, right, we feel that the deal making overall had been anyway growing at double digits, right? So here, what we try to do is look at new IPO raises, so raised through the IPO mechanism, and the growth up to 2019, even if there was some variations, had been extremely strong. And the same is true if we try to look at the amounts that were raised through VC, also double-digit growth. And it's also true if we look at the overall level of deals that have disclosed value, right? Obviously, you don't look at all the deals, but even if you just look at that sliver, and obviously here we include everything from acquisitions, partnerships, etc. Also on that side, the growth had been extremely strong even before, right? And as the crisis hit, leaders were a little bit concerned. So we typically talk to a lot of the CEOs, a lot of the investors, a lot of the founders. And out in March, April, obviously there was a lot of concern because a lot of the money, a lot of the cash is always tight. But certainly, with 40%, with less than one year cash to go, plus a large percentage with 1 to 2 years to go, looking at what felt like an abyss at that time, created a lot of concerns, and also there was a lot of expectation that the financing would be challenged. There were several companies that were aware of that made several trade-offs. Many delayed their IPOs by a year or more, mostly because they didn't want to compromise on value or on valuation. Apologies. About 2/3 of them at the time delayed plans to be acquired, again from a valuation perspective. And for those that were already generating revenue, there was an expectation that we would have above 10% drops in those revenues. And I think the feeling at the time was quite clear that in terms of the ability to fund and the ability to operate the business throughout 2020, there would actually be a decrease, right? So that was the feeling. There was a bit of a negative feeling coming into that, despite that wave that was already coming into 2019. But actually, through the crisis, money didn't really go missing. In fact, it increased. I think what you see here is, for example, VC funding got stronger. If you look at the first 3 quarters of 2019, if you look at the first 3 quarters of 2020, this is at global level, but it's also true by region. You basically saw a quarterly increase for a Q1 to Q3 total that is obviously bigger than, or larger than in the previous year, although 2019 was not a bad year. And if anything, you actually see the slight increase in late stage deals. So even from the VC side, which is, I think, is an interesting indication, not only of more participation, but ever more maturity in understanding some of these assets. The same happened at the IPO level. After a beginning of the year that was more or less in line with other years, as we got through Q2, when everything was starting to get challenged, and certainly at the end of Q2 and into Q3, we see the number of IPOs going up and the value also spiking. And you know, if we use announcements as somewhat of a leading indicator of the intentions of the market, we also see several announcements coming into apologies, into the end of Q3 and into Q4. So definitely a positive trend. In fact, the biotech IPOs, if anything, in our view, have gotten a stronger momentum versus other industries, right? So if we use the 2019 level as a measure, what we see is, if you take all other industries, we started the year strong, but as the crisis started, the level of IPOs went down. And if anything, on average, we have a decrease in terms of the number of those IPOs of some 30-something%, right? If we actually look at that curve of biotech, it actually shows that through the year, actually we had a higher number of closing IPOs. If anything, the year is likely to end on a higher level than in 2019. So you know, the businesses, as you see from some of you that talk to us about these topics, it's you know, the year was not so much affected, and the continued promise to deliver has continued to capture the attention of investors. I think one thing that sort of came into the lexicon ever more this year was SPACs. Obviously, we don't have time right now to go into those details, and I know that we're all discussing this in other panels as well. But the special purpose acquisition companies that are created to make sure that after a search period, they are able to rapidly initiate a public offering, have been clearly increasing throughout the year. So SPACs is not an invention of this year. They've been around for a long time. There was actually a bit of a surge back in the day, in the last decade, but there was always some questions around their validity, regulation, etc. Regulation has actually changed for SPACs over time, and what we see is definitely a spike, both in terms of the proceeds, but also the numbers of those overall SPAC IPOs throughout the year. And this is for the overall industry, but that's also true for biotechs. If anything, this year obviously has an unusual increase in the number of S1 filings, and the perception from some investors is that this is just a quote unquote an easier way and maybe a less burdensome way to match investors with assets that are very exciting and getting faster to an IPO. But certainly that's something that helped raise the overall value and the overall investments in biotech in 2020. So if you then finally look at the overall number of deals, the year is definitely tracking to be a record year. Here, what we're doing is, the usual breakdown of deals by number and the types of deals they are, and looking at total deal values and total and mean deal values. And obviously, we see a trend increasing. 19 was maybe a little bit down from this perspective. But what we see is 2020, if anything, just accelerating. More deals, at least, or a very high number of deals with known value, which obviously probably underlies an overall trend, even of those that we don't know the value for, and a total deal value and a mean deal value that is increasing. Even if you take one or two of the very largest, and there were a couple of them, very large deals this year, these numbers are still above previous years. And perhaps the other interesting element here is that not only the deals are going up, but if anything, there's perhaps a little bit of growth in deals that actually associate with co-development or JVs, right? Which we feel matches a lot of the trends that we're seeing more broadly in the industry, where most of the innovation is happening outside of pharma, where more companies are actually starting to even launch themselves. And so a lot of these deals are probably fueling some of those trends. But clearly, a very, very strong year when we look at the different facets within biotech from an investment perspective. And then on the third section and last section, we'd like to share with you some reflections on how we see the next year. As from all that we said, biotechs, I think it's fair to say are clearly on a high going into 2021, right? And some of the things that are driving the momentum into the new year is that obviously biotechs have started to themselves be a critical player in addressing the crisis. The industry has been extremely agile in ways that probably the industry never thought it could be or never needed to be, but which really increased the momentum. If nothing else, just by the number of assets that are being developed and tested for COVID. This has also created a lot of momentum for the industry. Probably the awareness of biotech in the public has never been higher, and that, of course, has facilitated the alignment of incentives across governments, investors, and biotechs, as we see from many of the vaccine efforts that are ongoing. It might be also that this year further created a perspective of safer haven, perhaps on investments in biotech. We'll discuss that in a second a little bit more, and this might actually spill into the new year. And so the forward implications look quite positive, not only because the deals are high, because the public markets are more active, and there's ever more commercial activity as many of these assets come out, while some challenges are always going to be there, like talent. So let's maybe just double click very briefly before we finish on a few of these points to illustrate them. As I mentioned, one of the momentum drivers is clearly the fact that there's just a lot of work associated with COVID that was not there before, and for all the good reasons. Biotech companies have been tackling COVID. What you see here is just the sheer number of vaccine candidates that are in the pipeline, well above 250 and counting. And at the same time, a number that is 360 plus in products that are being considered as candidates across different modalities for COVID, and ancillary therapies for related diseases, right? So not only biotech is reacting fast, but obviously this creates a lot of momentum in a lot of these modalities, in a lot of these therapies, in a lot of these vaccines. There's also, as I mentioned, quite a lot of public recognition. This is a very simplistic view, but we feel always a good view. How much Google activity has there been associated with biotechnology versus your usual let me buy another phone type of search. And what you see is that obviously the public industry, if you use this as a measure, as if anything, has increased throughout the year. And that obviously increases the public recognition of biotech. Interestingly, when you look at surveys across, for example, here in the US, there's an extremely positive view that even transpires to the broader pharma industry because of the response to this pandemic and the vaccines and the products that are being developed. This is perhaps a highly unusual number considering the history of the industry. And obviously this bodes well to people getting more involved, people supporting more, even when it comes perhaps even to broader institutional investment. There might be an element of safer haven here. So if we look at the total equity that has been raised on IPOs, and then basically the percentage that associates with the various industries, what we see here is the share that biotech occupies from the various IPOs, which always hovers around an average of about 7%, obviously with months changing. This was 2019. When we look at the same period for 2020, perhaps there's an element of more percentage of these IPOs, and obviously they're not all related to COVID in 2020. So it will be interesting to see if this progression, this deeper understanding, this excitement, public excitement about the industry means that this is going to be a place where people want to invest more than not. I think another element, obviously there's always a lot of conversation about bubbles, is that biotech might actually follow its own dynamics. What we try to do here is actually look at the normalized indices for NASDAQ, for S&P, and then for NBI, for NASDAQ Biotech, right? And if you look at the long-term trends, you can see obviously there was the 2001 crisis, which obviously affected a tech index like NASDAQ quite a lot. Same for biotech, and obviously they then grew quite a lot after that, even through the 08 crisis, which obviously created a bit of a drop. But even as we got to the later years, right, and especially as we went into the pandemic crisis, tech has of course been growing, as we know, but biotech follows a slightly different trajectory over year. Actually, if you look from 16 on a CAGR from 16, you actually see that it hasn't grown as much as the tech industry has, even if the longer term trends show more growth, right? So it has its own dynamics, even as the overall economy is moving, and that obviously is something that requires understanding by the investors, but that it might mean that it just doesn't. It not only follows the overall trends of the broader market. I think if we start looking ahead as we move to the end here, there's other signs that we feel are very encouraging, and one of them is also the dry powder, let's call it like that, that is sitting with pharmaceutical companies, right? So what we did here is basically looked at their ability to do M&A or other types of investments, and we feel that there's probably about 100 or so billion in idle or excess cash. There's obviously ability to get new debt. There's free cash flow that will just come from this year, minus some of the commitments, but we feel that dry powder is probably in the region of close to 200 billion. And that's obviously investment that is ready to also be deployed on the biotech side. And this is particularly true knowing that most of the products, or more than half of the innovation, is now happening extramurally to the larger pharmaceutical companies. And if anything, we have more and more first-time launchers into the market. So that's another source of value that goes beyond the public market, that favors the look ahead. The other element is, of course, that the innovation continues to happen, right? And what we see here is basically the expected growth of phase 3, phase 2, and phase 1 assets, right? But even the phase 3 assets are continuing to grow, with very healthy growth on the previous steps of clinical development. So even if you can consider that there's not going to be much improvement in attrition, or maybe even some decline, the pipeline is just going to get bigger, and the shares of IPOs in these phases has actually grown, including for assets that are a little bit earlier than before, which again tells you not only about the excitement on the investment, but also probably about the maturity and the increased sophistication of investors into the area. I think we also see a more committed investor base, right? So 8 out of the 10 biggest pharmas have their own CVCs, but now they're actually trying to get involved with VCs that funds themselves, which I think again brings the level of understanding and sophistication, but also the firepower together into those investments. That's probably particularly interesting in areas like Europe. And as we said, a lot of the deals are actually going earlier, which again I think denotes probably not complete irrationality, but more understanding and sophistication. And if anything, and I know it's always very tricky to compare IRRs, but if we don't look at the relative numbers, but just the broad trend, what we see is that venture funds are actually quite successful, both in early stage and in late stage, with growth across the regions. So I think we have an ever more committed investor base coming in, right? And then finally, talent the industry continues to be, in our perspective, a great attraction for talent, right? So here what we're looking at is using BLO data from the US. We're looking at the number of employees in R&D in biotech, right? And you see that it grows even through the crisis, whereas other industries are probably finding it more difficult or remain more or less the same, even like pharma, right? But this shows you the level of attraction in the growth that is coming also on the organic level on these companies. This obviously is also a challenge because as one of the colleagues mentioned, there's probably much more money than there is talent, and that's true in some regions even more than others. So this is going to continue to be attractive, but it's going to be something to watch out. So to finalize, what we'll be looking at going into 2021 is there any additional disruptions that can crash this wave? And will other markets be able to offset, which is what is obviously a very strong presence from the US market. We have great momentum in Europe, great momentum in China. So we will see how that will change the direction of the wave in 2021. Will we see in 2021 more companies pushing to stay private because there is enough money, and you probably in some cases save some hassle in going public? And will some of these companies actually continue this trend of becoming first-time launchers? And then thirdly, we will be looking at how companies can be best prepared for some challenges. Supply was a challenge this year already, but with more modalities, with more businesses, with continued disruption out there, this might actually be a challenge to look into 2021 as talent, as I just mentioned. Before I stop, I just want to thank LSX and for their collaboration, and of course all the colleagues out there that we interviewed on the executive, CEO, founder side and the investor side. It's been a pleasure to work with you to synthesize some of the insights that we hope are helpful for our discussion and for the meeting more broadly. I will pause there, Josh, and thank everybody for joining.
Fantastic. Thank you, George. And yet, I'd like to also reiterate my thanks. There's a number of people who you'll be hearing from later today on some of the panels who helped contribute to the report, as well as a number of the companies who are presenting in the showcase who also did the same. So thanks to you all for your inputs into what I think is an awesome piece of work that, extremely relevant and sets the scene beautifully for the rest of the discussions that we're going to be having over today, and then on our second content day on Monday. We do have a number of questions that have been asked that I'd like to run through now. We have some time to do so. For those of you listening in live, if you do have any questions now, please do put them into the questions section or the chat function on the Swapcard platform. But first and foremost, I have a question from Matt here. So and it's one that I was keen to ask as well. So obviously we're going into a little bit of the next stage of the roller coaster with the pandemic. You know, there's been new lockdowns and new restrictions in a lot of places. Also on the positive side, the Pfizer Biotech sort of vaccine news and other vaccines as well, hopefully showing some positive data. The data you showed originally in the first part of the presentation was sort of July to October. So how do you see that maybe evolving now, you know, if you were to take November and onwards, sort of expanding upon your point as to what the future holds? How do you think that data might evolve as we enter the next phase?
Absolutely, Josh, and thank you for the questions from the group. If you actually look at it, and that's true as we've been talking to basically many actors in the global economy over these months, people have always tended to look at that middle scenario that I showed. So a very wavy, slow recovery, right? So I think for most of the actors in the economy, the news is perhaps not surprising, and I would argue that the Q3 results are great, but they're probably not there to stay, right? So if anything, I think the news that we see now let's call it the negative side, as cases increase, as things also now perhaps move a bit again to the US. I think the expectation is that recovery will happen towards the end of 2022, right? So I think that's something that even as opinions changed, at the end that view has never really moved that much, right? We did have a decrease of about 15%, which at the beginning people didn't think was possible. It was thought were too negative. The same way, you know, this increase in Q3 is probably not going to spell anything before 2022. Now, on the positive side, you mentioned the vaccine news that were announced this week. I'm sure we will have announcements in the coming weeks, and obviously we hope that the efficacy of the therapies come the final analysis in the reads into December and January continue to be on that 90% level, right? Assuming that that's true, obviously things will probably improve a little bit faster. But obviously, as you can imagine, and we mentioned that supply is going to be a big challenge for the industry, right? So while we're all very excited about it, we obviously have to temper that with the fact that, you know, providing billions of doses of vaccines is in a very short time has never been done. We've beaten certain records now, Josh, right? But that is just physically it takes time, and obviously it assumes that there's no surprises on the, let's call it open label extensions of about a year that people are planning, right? So I would say it still goes on a very slow recovery, but hopefully with no W curves. That would be my answer to that one, Josh.
Fantastic. We also had a question from Michael Meller, which again I think is very relevant and related to COVID again. But if you were to take out the data in terms of the deals around sort of anti-infectives, anything related to the fight against the disease itself, how do you think that data would change? What would the picture look like if you were to take out the sort of direct COVID response sort of deals and investment?
Yeah, that's an excellent question. Actually, we just yesterday we actually put an analysis out on that in Nature Biotech. So invite all of you to consult that. Obviously, the numbers would not look far better than 2019, but they would basically be on the same line, right? Longer trend, maybe a little bit below, but versus 19, they would definitely be at the same level, right? Now, you know, I think that's an interesting analysis. I would also say that we have to remind ourselves that the COVID deals are not all to create a vaccine that doesn't exist. And so there's a lot of other products that have other indications that support companies that are not necessarily, you know, starting up to fight COVID. that has an incredible ripple effect. Remember, 360 plus therapies, none of which was directly developed from day one for COVID, right? So I think it's an interesting analysis, but it hides the fact that there's this additional investment. And let's not forget, I mean, some of the most promising assets coming out of the vaccine side are actually modalities that have never been used before, right? So the ripple effects you expect and you start to see, for example, on RNA technology, are probably going to be very exciting, well beyond the need to fight COVID.
Yeah. 100%. And it kind of relates to that, I suppose. It is a question from Angela here of, are you seeing a change in the types of technologies generating investor interest as a result of the pandemic? So I guess there's those new modalities and things, but I guess one of the things that we're focusing on for the rest of the conference here is on convergence of different technologies. And we have panels looking at investment into medtech, digital health, as well as therapeutic biotech and consumer health as well. So have you seen any sort of change in the dynamic of investor interest into various different types of technologies aside?
Oh, absolutely, Josh. I think there's those two effects, right? We have modalities that we were all very excited about, especially if you're somehow a scientist like I am, / consultant / participant of the industry. But it's very interesting that people talking about RNA, people asking about RNA, nucleic acids, etc., just completely went through the roof, right? I think a lot of these modalities that we see, and we probably will start seeing the same thing for personalized vaccines for example, in oncology. I think a lot of these things are coming to the mainstream. So I think that there's that effect. The other effect of the crisis, which we didn't touch too much on today, is we have seen a dramatic change in the way that the industry interacts with its stakeholders, namely physicians and patients, right? And caregivers and nurses, right? So this whole topic of remote engagement, which we really see through the months and through the intentions, through specialties, through countries, is definitely here to stay. Now, that changes a little bit the game, because it allows you to think about a commercial model that is far more remote, far more focused on delivering particular elements of knowledge, for example, to key opinion leaders, but also certain messages that really help physicians on the therapy daily. But that changes the cost structure of your operation, right? Changes the speed by which you get there. It changes your ability as a small company to actually have a conversation that might have been very hard to have in a world where other companies had those relationships, and rightly so, for many, many years, right? On the other hand, I think, we see this, for example, in clinical trials. All the digital platform that is rapidly being implemented, and we know how clinical trials were disrupted in 2020, to engage the patient while on clinical trial and while away from the site of care. Accelerates not only biotech, but also accelerates all the industry of health tech that is around that. I think hopefully in February we'll have time to discuss more of that, and I do a bit of publicity here for the LSX meeting, Josh. But I think it will be very interesting to see in February where we are on the health tech side, because we're seeing some very exciting stuff.
Wonderful plug. Not planned at all, but thanks. McKinsey.
You owe me one.
Joining us for our LSX World Congress in February as well, with a report and involvement across the agenda, which covers biotech, health tech, and medtech. Yeah. We do probably have a couple more minutes. We have our panel focused on Chinese investment coming up at 10 o'clock. There was a question here from Peter Race, and I wanted to get to as well, which was, the question is, do you have a view on the potential impacts of change of retail and consumer acquisition of biotech products?
Oh wow, that's a very interesting one. From the retail, by retail and consumer, I'm assuming that it's direct acquisition of products, rather than retail as a channel, for example, in the US. So let me take it that way.
I think that's the thrust.
Absolutely, a very interesting question. I think some of the developments that we're seeing, for example, the use of new antigens, right? The more this gets, the investors get familiar with this type of products, the more likely these products are going to be used from from a question of knowledge, a question of safety, a question of some level of efficacy in products that are on the consumer side. So I think one thing that I would highlight on that is, if you look at all the trends in the peptide industry, peptide synthesis, etc., I think we're seeing more and more the possibility of using that in ancillary industries that go much more through consumers. So things that some people are starting to invest in, talk as cosmetic therapies, etc., etc. So I think that's definitely one interesting element. The other is, of course, the consumer side that we were just talking about, associated with a new, let's say more traditional biotech product that comes to market, that gets prescribed, etc. But that whole consumer side of you consuming a digital therapy, right? Or consuming a digital platform or a remote platform that allows the patient to meet, and the physician together, to meet the targets of that chronic therapy, for example, right? And you see how much excitement there is around platforms, for example, on diabetes associated with some products. I think that will definitely drive the consumer side much more, right? And the more people are familiar and comfortable with the industry, obviously all these things will help. So to Peter's point, that would be my reflection. I think there's elements of consumer industry that are going to come to play here. Whether it happens already in 2021 or it happens a little bit more over time, I will probably incline myself to the second side.
Fantastic. And yeah, we'll be again addressing some of those points and questions around consumer and I guess all the different technologies and how they are converging in the space, both due to and sort of the underlying trends that the industry is going through anyway, in our panel this afternoon focused on that topic. I feel like we could probably keep on talking for hours really, and I'm sure there's lots of other questions, but our next panel does start in just 4 minutes. So with that, if you do have any further questions, follow up that you'd like to ask Jorge or any of the McKinsey team, then please do so in the chat function on the right hand side, or indeed through their virtual booth, which you can find in the partner zone. But for now, a huge thank you, Jorge, for the presentation and for kicking us off for Investival this morning. Yeah, see you again very soon, and see you on the China panel in a few minutes' time. Thank you, everyone.
There, and thank you all. Thank you. Bye-bye.